While business people and trade union officials downwardly revised their inflation expectations, market analysts, whose expectations were already lower in previous quarters, kept their estimates unchanged. The combined average of the three groups declined to 4.5% for 2025. That's 0.3 percentage points lower than the 4.8% average they collectively anticipated in the previous survey.
According to the latest survey, inflation is generally expected to remain around the midpoint of the Reserve Bank's 3 to 6% target range. This applies both to the short-term inflation forecasts and the longer-term forecast, and the Reserve Bank will be very pleased with this outcome because it has now anchored inflation expectations at the midpoint of its target range. This is important because inflation expectations tend to influence general price setting in the economy and including wage settlements.
With industry and workers seeing average inflation lower, this could bode well for future inflation. This survey is one of the tools used by the Reserve Bank to help gauge inflation expectations, which ultimately feeds into its interest rate decision-making process.
This vindicates the interest rate cuts that we've already had, and we still think that there is scope for further interest rate cuts in the coming months. We're penciling in 2 more quarter percentage point interest rate cuts from the Reserve Bank.
Having cut interest rates by 50 basis points since the start of its rate-cutting cycle in September 2024, all eyes will be on the Reserve Bank's next interest rate call at the end of January next year. Nompumelo Siziba, SABC News, Johannesburg.